Hello traders, welcome back to the channel and a new video in the education trading. Today I'm going to talk about a topic that gets a lot of attention recently and is one of the most important concepts and techniques that I use for my own day trading, and that is the concept of absorption. Okay, so I'm gonna be using the Sierra chart platform, and I'm just gonna go over a few examples, talk about the definition of absorption and what this entails, and then just show you sort of a brief introduction to how you can identify this on your charts when you're using order flow tools. Okay, so first let's begin just with a quick definition. So absorption occurs when price reaches an area where the market provides a significant amount of liquidity and the market absorbs large orders without a significant price change. This typically will occur at key levels of support and resistance where there is a large buy or sell order sitting in the book, or that are refreshed or reloaded repeatedly. If there is more liquidity than aggressive buyers or sellers willing to do business beyond these levels, then there could be a reversal, and this is where we as traders can take advantage of some very good risk-reward trade opportunities. When we see absorption, that is a clue that a big player or players are defending this level and using aggressive traders, which are usually retail, as liquidity to fill in their large order for a possible rotation back. Okay, this can be seen on all time frames, and the best tools we can use for this are the DOM, Delta, and the footprint charts. Delta, of course, refers to the difference between aggressive buyers, market buyers, minus aggressive sellers, or what we know as market sellers. Absorption is something that we can watch happening in real time, and that is why it is such a valuable tool for order flow traders. So again, in this video, we're going to go over 3 examples using the S&P 500 futures instrument through Sierra chart, and how we can identify absorption at key support and resistance levels. I'm not going to go too much into detail on strategies and other confluence factors to use, because I just want to keep this video simple and just focus on how we identify when absorption is occurring. But you can check out my day trading with order flow course if you want to learn more about all these concepts and strategies, and you can find the link for that down in the video description. Okay, so first I'm gonna go over this is a video that I have on my channel that I recommend you all check out as well, just to get a better idea of these concepts. It's called Understanding the Differences Between a DOM and a Footprint Chart. I made this video a while ago. I think it was almost like a year and a half ago, and I know the audio is not the greatest in this video. This was right before I upgraded my microphone, so the volume is a little loud, but the video goes over some very important concepts where I talk about how a lot of newer traders, they confuse the concept of what a DOM is, which is what we have here, which is where we have all the resting orders to buy and sell on the book, versus what a footprint chart is showing us. Okay, so just as a quick recap, but again, I recommend you watch this video. Just search for it on my channel. As I have here the DOM for the S&P, so we have the price in the center, and then right here on the left we have the resting bid orders. So these are limit orders to buy below where price is currently at, and then we have the ask, and this is the orders, limit orders to sell above where the price is at. Okay, so if we only have passive traders using limit orders in the markets would not move, because we need engaged, aggressive traders that are willing to either market buy and pay up to get fill on their long positions, or we need market sellers that are willing to hit the bid down to get short and then go short in the market. And as we know, for every buyer, there's a seller and vice versa. So that means that every time there's an aggressive market buy order, that's going to be filled on the other side by a passive limit order to sell. And whenever there's a market sell order, that's going to be filled by a passive limit order to buy. Okay? And so when we look at a footprint, it's basically the opposite of this. Assuming this is a bid by ask footprint, because I'm going to show you there's other footprint types you can use. But if you're looking at a bid by ask footprint, on the left side, we have executed market orders to sell. And on the right side, executed market orders to buy. Okay? So on a DOM, these are orders to buy, orders to sell. On a footprint, these are executed sells, these are executed buys. Okay, so that's just an important concept that you should know. And this is why footprints are so valuable for what I'm going to show you in the video, because you're actually going to be seeing the exact executions that we're going to have in this market. And that's why futures are so ideal to trade and use order flow and absorption concepts, because we are looking in real time at all the executed volumes, since this is a central market and all the orders are executed on the CME. Then this is all real-time total traded volume data that we are going to be getting for whatever the market is that you're going to be using on the CME. Okay? So now we are here on Sierra chart. This is a 1 hour chart. And just to zoom out, we've been making all-time high levels. So pretty much once we had this breakout here, since the February 21st, we've had a big run up here for new all-time high levels. And I've marked off here this 3 important support resistance levels. You can see how these levels have been very significant over the last few weeks as both support and resistance areas. And so we are going to talk about 3 instances here. One is going to be down here that I have marked off in blue, and then 2 opportunities here of how we could have identified absorption in the using the footprint chart and order flow tools. This was on an FOMC that we had on Wednesday, so you can see this huge reaction was based off of interest rate news. But you can see how the session started as usual right before a big news day. We're going to have just very little volumes, liquidity, sideways action until the news hit. But we had a couple of clear absorption examples in this resistance and this support. And then we're going to look at this support level as well. Okay, so now let's jump into an intraday chart, and let's first start talking about this example that we have down here on the bottom. This happened on March 15th, right around the 1 o'clock hour. So right around the lunch hour, which typically is not, there's not a ton of activity or volumes happening then. They will ramp up right around 1 o'clock again. So we're going to talk about this example. Okay, so now we are intraday. We are looking at a 3,000 tick chart on the ES market. We are in the June 2024 contract now. And this is the spot that I marked here on this little rectangle where we're going to see. As you can see, this is during the regular trading hours. We had an open and we just have a lot of big rotations to either side. And then we had this push right below the initial balance low here. We tested the 51.6925 level that I showed you as a big high time frame support historical level. We came into that level, we started holding, and then we had a move up. We reclaimed the initial balance low, and then we had a very nice rotation up all the way into the valley area high and into this previous areas of resistance that we had earlier on in the open. Okay, so when we're looking for absorption, like we said, we're looking for the market to hit areas of big liquidity, which is usually significant swing highs, swing lows, or just important support resistance levels where we expect significant orders to be resting, like we're going to see right here. And then what we're going to look for is higher volumes, meaning higher trading interest, traders coming in to participate, bigger orders being executed, and we want to see aggressive buyers or sellers getting absorbed. Okay, so let's move on to the footprint chart and look at what happened here. Okay, so here I am zoomed in on that area on the 3000 tick footprint chart. As I told you, there's different ways to use footprint. There's the bid by ask, or the method that I like to use, that I use most of the time, is going to be volume by delta. So that means on the left side, I'm just going to have the total volume of contracts traded at this price level. And on the right, I'm going to have the delta number. So if it's negative, that means there was more aggressive selling than buying. If it's positive, more aggressive buying than selling. And I have here set on my Sierra, I have highlights for different volume thresholds. So anything above 1,000 contract volume, I have it set as a purple highlight, and everything above 1,500, I have it set as an orange highlight. Okay, and that just makes it easier to identify where there's big market interest coming in. So as you can see, market was coming right over here. Again, this is the level of interest that we're talking about here, the historical support and resistance level. You can see up here, there was a lot of aggressive selling and buying, both combined right around these levels. But then we did get this breakdown. We came into this level, and then notice how in this whole area, we have all these clusters of highlights. We have a lot of purple and orange highlights. That immediately tells me that there's a lot of resting liquidity being filled and executed over here, because we're getting a lot of volumes compared to other areas of the chart, which you can see there's not a lot of highlights before, aside from this little area. But then here we have a whole cluster around a level of interest. And then if I look at this, you can see that this candle right here on the first test of this level, a lot of negative delta right on this candle. Next one, we have negative delta at the bottom. You can see all the bottoms of these candles have negative deltas right at the bottom of the wicks. Here you can see we did dip below this level, and then we had some aggressive shorters back here. Market, we did get a big buy order executed here. You can see from this little green highlight, pushed up, then we came back down, and this was a great signal to have gotten in right over here. In this case, you can see how the market pushed back, and once we got back to this level again, we have the biggest volumes yet, 1,683 contracts executed. Then below that, 1,005, all being negative deltas. And immediately after that, you can see that the market just ripped to the backside. So what's good about spotting these absorptions is, again, you get a very nice opportunity to get a tight risk on your trades. If you're looking to get long, let's say this starts pumping and you get long somewhere around here, you clearly know that your stop loss should go right below where this big absorption or big volume interest took place, okay? And then in that case, you know, you can see that we had a big rip to the upside. Obviously, you know, that doesn't mean it's guaranteed to always happen this way, but this is one of the biggest uses of absorption, is just identifying areas where you're going to get, in this case, aggressive sellers that are caught on the upside. Then when this reverses, we get big aggressive sellers coming in, as you can see from the delta in this big candle. Look how we were going from big negative deltas coming into the level. Then we sort of started getting more just regular numbers, and then right here we just got a big infusion and a change in sentiment, and now aggressive buyers are joining in. And then anyone that is caught short over here is going to get either stopped out, or they're going to have to bail out of the trade, and that means they're going to have to buy back their position to close, and that just adds fuel to the fire for a reversal to the upside. Okay, that's the first example. Let's now go and look briefly at these two examples that we have here right before the pump from FOMC. And again, remember the significance of these levels. These are historical support resistance levels. There's two orange lines that we're going to be watching on the lower time frame. Okay, we're back again here in the 3000 tick chart. We're going to be looking at here and over here. So remember, this is the first level we're talking about, and this is the second. So on this example, we first had price pushing up into this level. We had a big rejection, and then price pulled back again into this area. And this is where you can more clearly see the buyer absorption and then the move down. And then right under here, this was like 20 minutes before the FOMC numbers came out. And you can see we had a push down again into the 52.33 level. And you can see as well, this was the lows from the overnight session. So you can see this high volume node here, and we're pushing right into the lows. Let me zoom in so you can see this more clearly. You can see how we pushed right here into the lows from the overnight session as well, before we had this very impulsive reversal to the upside. So let's go look at this two instances on the footprint chart. Okay, so here we are in the 3000 tick footprint chart. And again, this is a volume by delta footprint. And you can see this was the first instant here right around 10:30 in the morning when we set the initial balance high. This was the retest of the 52.47.25 level we talked about. And then you can see we did have some high volumes coming in here. We had a very quick reversal, and you can see how delta turned very negative, and limits and market participants both were in sync, pushing down. You can see how the negative selling started upticking a lot, the aggressive selling. Then when we come back into this area, let me get rid of this blue square. You can see right over here what happens when we pull back into these levels. We have another clustering of high volumes right over here. And what do you see? What do you notice on the tops? Everything right over here is aggressive buying right near the tops of the candles. Aggressive buys, aggressive buys. This one was a sell. Then a really large aggressive buy here, 2,223 contracts is the highest we've seen on all these candles. And again, to the upside, and then market just pushes down. And this is a big clue that this whole area is being defended a lot. So in this case, then that tells us that, you know, we're putting our stopper protection just beyond this levels where all these aggressive buyers are getting absorbed, and they're getting, they're potentially going to be on the wrong side. And then you can see down here, market just started pushing down again. It's going to turn highly negative on this candle as well. And then we just push down into lower levels. Okay, so just very clear absorption of buyers right here at the top on this retest of this significant level. And then moving down to this bottom test, this was just before FOMC, like right here on this candle. This is when the announcement came in, and you can see like a huge aggressive buying coming in to this candle. But if we look down on this level, when we did the retest, let me get this off. When we did the retest of the 52.33 level, we had market coming down. We had this little cluster of high volumes and all negative volumes down here at the bottoms, negative deltas. So we have high clusters of volumes with aggressive selling into a significant area of support, and yet market is not pushing down. And literally right after we just ticked this level, then you can see buying just starting to scale up, and the aggressive market buyers are now getting in sync with this reversal. But you can see how we had this absorption right here on the retest of this level right here. Okay, so that's pretty much the concepts of what we are talking about in this video. Hope this has been helpful. And again, this was just one of the elements that I look for. I'll also use delta, cumulative volume, delta volume profiles as well, just to form my strategies, as well as price action patterns to look for the best entries using these concepts. But this is how absorption can be a very simple and easy concept to identify if you have the tools available, and it can greatly help you in your day trading strategies. Okay, and if you want to learn more, check out my course page as well. There's a complete 4-course bundle for a 25% discount if you want to check that out. And make sure to subscribe, hit the thumbs up. That'll help the channel to keep bringing you all this content in here like this. And I will see you all in the next video. Take care.